Everybody, welcome to the Investing the Right Way show. This is another conference call. We've got a few people, it looks like, that have attended, and we are recording this so that people that were forced to miss can turn around and watch it again. I've got Tanner on the other end of this somewhere. Tanner, are you there?
Hello? Yeah, I'm here.
Okay.
You hear me,
So,
Jimmy?
yeah, I can hear you. So the reason why I was prompted to do it this way is because I think there probably needs some discussion about what's going on, what has transpired, and what we think is probably likely to happen. I've had a couple of people actually sound off on the Facebook page saying, "Hey, I haven't heard from you. You've been uncharacteristically quiet. What's going on?" So we're here to. That's what we're here to discuss, what's going on. To do that, I need to take you back in time, kind of rehash some of the things that we've talked about before. I told you guys I was going to be very transparent, and as such, I was going to be very inclusive of having the word God associated with what I do here. Tanner and I, as far as, hey, Robert, we don't want to see your webcam.
Sorry.
That is funny. Tanner and I foresee this becoming a ministry. And so we can't hide God out of the equation. And last week, I was pretty frustrated at God. I was pretty frustrated because, see, I believe, and Tanner believes the same way, that we have been called into this position. Does it mean that, wait a minute, Jimmy, you're saying that God's going to give you the secret money code to the stock market? That is not what I'm saying at all. Does that mean we're not going to lose money because God's going to whisper in our ear? That is absolutely not it. But just as Solomon was granted wisdom, I believe we can be granted wisdom as well. We'll use Solomon for an example. Even though he was supposedly one of the wisest men to ever walk the planet, and certainly according to biblical texts, he still did stupid stuff. For one thing, he married 300 women. That was stupid. I'm sorry. And I don't know me, I'm not slamming women. I'm pretty sure most of those feel the same way. You marry one woman, not 300. You're stupid. So we're still capable of making bad decisions, even though we can be granted divine wisdom. And so that's what we've been praying for. And last week I was pretty frustrated. I was pretty frustrated because every trade it seemed like that I was going into was meeting with resistance. And in many cases I lost money or broke even on. And many of you guys followed me into some of those and you lost money too. You didn't lose big money, $20 here, $30 there, but it was still a loss. It's certainly not a win. And so I was pretty frustrated with God and said, God, I just don't understand what's going on. And real quiet in the back of my mind, as he's done so many times in the past, is he said, I'm teaching you. I said, all right. I mean, I get that. You teach me now, lose a little, and then that way you don't have to teach me later when I might lose a lot. I get that. I came home. I was actually at church when that occurred. I worked the sound booth at church, and I was sitting in the sound booth not listening to a thing. Our Bible study person was teaching because I was just brooding and mad, and that's when I feel like I heard this message come back, I'm teaching you. So when I got back, I pulled up my chart like you see on the screen here, and I was going to go through stocks, coming up with a short list for the next day because I got to at least go through the motions even though I'm frustrated. And that's when I saw something on this chart right here, and I went, "Oh my gosh, I'd never seen that before." And I'll go ahead and zoom in a bit. This is the S&P 500, and so I'm going to just draw a little trend line, just one little single trend line on this. And what I noticed is we were drawing a tabletop right across here, a nice level tabletop, meaning the S&P would bump up against that, but just couldn't seem to get beyond that point. Now, I noticed that here on this evening right here, which was the 22nd. So I made a video the next morning showing what I was seeing, saying that, usually when you see this trend materialize in a real stock, a single stock, not a collection of 500 like the S&P, that usually always means that it's going to break down at some point. And indeed, that same day it did. So I recorded that video the very next morning, and that day it broke down like cool. The next day it broke down hard. And during this time frame, I actually, I believe we waited. I believe we waited to see what would happen. And you could see it was a significant move, and this reads to be a 30-point move in a day. Okay. The next day, it stayed below its 50-day moving average. This wavy blue line right here is the 50-day moving average, and actually bounced off or got really close to its 100-day moving average. That's this yellow kind of curvy line down here. And so we decided we would get into a put play. The put play that we got into was Starbucks. And so we felt like we got into a good buy point, but it was a new trend for Starbucks. So Tanner and I were questioning each other. And I said, Tanner, where's our get out point? And he says, that's what I'm wondering. Where is it that we get out? It's kind of hard to draw a trend line on this. And I said, well, call your mentor. So as Tanner is my mentor, he's got a mentor too. And I'll give you just a little bit of insight on that without trying to reveal too much. He actually paid a lot of money to the tune of somewhere around $10,000 to learn what he learned. Everything that he learned for $10,000, that's what he's been teaching us for free. So you're getting what other people pay a lot of money for absolutely nothing. One of the caveats to this expenditure, this enormous expenditure that he paid to learn, is that he could call them up and ask them for advice, get another set of eyes on a stock that he was maybe considering. So that's what he did. He called them up. They looked at his stock, and the person on the other end of the phone, not the head chief in charge, but one of the underlings, I guess, that works there, looked at it and says, oh, I don't think you should be in that stock at all. Why is that? Well, because, your trend lines aren't really established yet, and the market's not really set up for this type of play yet, for a put play. We really don't think you should be in that. Tanner called me back, and so I said, well, I guess we got to, they have more experience than we do. Let's get out. So we pulled out. Right after we pulled out, it went right the direction that it was supposed to. And I got mad again. This time I wasn't mad at God. This time I was mad at myself, because I believe this consolidation that you see on the screen with the S&P 500 was divinely shown to me. I believe that. Now, it wasn't being discussed in the markets. These people that Tanner learned what he learned, they never said anything to him. He gets a daily email from them. You couldn't find any mention of it anywhere on the internet. I know I'm not the only one to see it, but nobody was talking about it. So when it was revealed to me, it wasn't because somebody called my attention to it. I believe the blinders came off, and God actually showed me something. Look what you've been learning. This is applied to this too. And so I said, you know what? We shouldn't have got out of that. We should not have got out of that. This has still got room to go. I apologize to you guys on the Facebook page. Turns out when I sent the text alert to get out, half of you guys didn't get it for whatever reason. Your phone dumped the text messages hours later, overnight. You were sleeping. I heard a few stories about people that didn't get out of the trade. They were still in it. And so I said, well, good, stay in it. And I kept monitoring it. The next day, that particular stock, Starbucks, kept going down, and I monitored it. And when we got to a sell point, I let y'all know. Y'all all got out. And one guy reported to me that he made $600. Yay! I don't remember who you are, but awesome. I wish I had been in there with you, but it was too late for me to get back in. So it actually inspired confidence in me. Then the next day, yesterday, that's this day right here, okay? I went into Texas Instruments, still in Texas Instruments now. Actually, it wasn't that day. It was the day before. I watched what I thought was a good buy point on Texas Instrument, looking for a kiss goodbye, only to discover after I bought in that it was not a kiss goodbye. It was something completely different. And let me just go ahead and show you that too. So let me pull up Texas Instrument. Again, we're on the daily chart. You can see I've got some trend lines drawn here. Let me just go ahead and remove those trend lines so you can get a better picture of it. What I was looking for was we passed below the 50-day moving average right here. Okay, that blue line again is the 50-day. This shows an up day, but I actually bought in on the next day. We had not come above it. We actually hit the 50-day, moved down off of it, just like a kiss goodbye is supposed to happen. I saw a heavy volume spike, and that's when I bought in. Right after I bought in, it went above the 50-day moving average. You sorry piece of junk. You sorry piece of junk. But a friend of mine told me that he believed, and I hold him in high regard. He says, he came to me the other day and he says, Jimmy, he says, I think God wants me to tell you something about your trading. I said, okay. He says, I believe God's telling me to tell you that you need to make sure that you trade out of faith and not out of fear. He says, for whatever that means. I don't even know what it means. Well, here I am the next day, it does that. I immediately, according to the rules that we've established, this 50-day moving average should have been our out point. When it went up past that, I should have bailed on it, and I would have suffered another loss. I said, you know what? This particular stock's going to be different for me. This stock, I'm throwing out all the rules. I sent you guys a text message and said that, if you feel like you need to get out of this stock, get out of the stock. But for me, there's something else going on with it. I'm having difficulty trying to articulate it, but I will tell you that this is a faith and a relationship issue with me and God, and has nothing to do with y'all. Okay? Every single time I put my finger on the button to sell out, I heard those same words in the back of my mind: fear or faith. So for me, this is a line in the sand for me. God, did you reveal something to me? Am I really supposed to be here? Did I get it all wrong? Well, you know what? It doesn't really mean anything to you if you're not willing to lose it all. If whatever it is that you go into, if it doesn't mean enough to you that you're willing to lose it all, then you'll never truly be successful at it. When I became a photographer, I was willing to lose it all. I spent my tax return check on my first camera when I should have been paying some past due bills because we were dirt broke. I was willing to lose it all. And you know what? I'm willing to lose it all this time. I again reiterate to you guys, if you followed me into Texas Instrument, if you feel like you need to get out, you get out. But for me, I'm in it for an entirely different reason now. I'm waiting for God to prove himself, and I believe he will. He's never not proved himself to me in the past. When we go on to the next trade after Texas Instrument, when I get to my get out point, I will sell out of it. But for this trade right here, I believe God's got something in store for me. And so I've held. We flash forward to today. Today, that stock opened right here. It gapped way down below its 100 moving average. And if I saw it on the screen, I instantly made $300 when the market opened. And my finger hovered over the button. And again, even though I was to the good, that little still voice in the back of my head said fear or faith. If I was going to get out, it was because of fear, because I didn't want to risk losing it all. I had a chance to make money with it. Held on to it. It went up. It kept climbing. It kept climbing. I kept losing money. At one point, I was down $175 on it. I'm into 4 contracts on it. It got close to its 50-day, then it started sliding back down, and you could see where it ended. At 2 times during the day, I could have broke even on it. And every time I went to go get out of it today, I heard that little voice, fear or faith. So this is not a typical trade. It's not one we would teach or train. I told you that I got into this thinking it was a kiss goodbye because we passed below the 50-day, but in reality, it's not. I'm going to back out and show you something. This, I think it's called an ascending wedge. I like to call it a tornado because it looks like a tornado on its side. The narrow point of the tornado is on the left-hand side of the graph, and the wide area or the wide side of the tornado is on the right-hand side. And you can actually draw a kind of trend line across the bottom. Let me do that real quick. I'll just pick 2 just at random to get kind of close. And you could see how we've got a bottom right here. But the humps on the peaks get bigger and bigger. And what I've noticed is on these type of trades, and I'll show you another one. I'll show you another one that's very more easy to see. But what I've noticed is as those peaks get bigger and bigger and the bounces happen, eventually the bounce gets so big that it breaks through. It absolutely broke through here today. Okay, it did exactly what it was supposed to. I expect to see this stock continue to slide, provided that we don't get some enormous rally in the S&P 500, which we're going to look at again here in just a second. Let me show you Fastenal. You remember we went into Fastenal, same thing. That really looks like a tornado, don't it? And as the humps get bigger and bigger and bigger and bigger, eventually you reach a point where it just busts right through the floor and it continues to go down, and that's exactly what Fastenal's doing. So I expect Texas Instrument to perform this exact same way, because these type of patterns apparently have a way that they like to perform. So that's what I'm looking at happening. Now, let's look at the overall S&P 500 again, because here we are. I'm going to zoom in a bit. You can see that we went down so low and bounced off our 100-day moving average that we begin to pull the 50-day moving average above it lower. In fact, this red line is our 10-day moving average, and it's now crossed below. It's actually lower than the 50-day moving average. That's hugely significant. Something's going to happen here. We can't continue to go up and down, bouncing back and forth between the 50 and the 100. Something's going to happen, and it's going to happen this next week. It can't go much further before there's a breakaway. We're either going to go above the 50-day moving average, okay? And in which case, if we stay above the 50, particularly if we close above the 50-day moving average, but for sure, if we can get there and stay above it for like an hour, 30 minutes or an hour, it'll be enough for all the technical traders out there that are watching their charts to go, that's it, we've got a rally, and they'll buy in, and it'll go to the moon, okay? It'll go straight up. There won't be no stopping it. We got a nice rally on our hands, okay? Or it's going to eventually break below the 100-day moving average. Again, if it breaks below the 100-day moving average, and I don't mean just dip below it and come back, but if it sits there for 30 minutes, it'll be enough for all these technical traders that are watching their charts to panic, and you'll see the mother of all sell-offs happen. Okay? Hello, bear market. Not correction, bear market, because it will be such a massive sell-off from the panic that will run rampant through the market. Now, I got one more thing, and then I'm going to allow Tanner to talk. I just got back from seeing a friend in the hospital. I'm going to pull over. This is Yahoo Finance. When I got home this afternoon, I pulled this up. This was one of the headlines on Yahoo Finance. It says, Wall Street week ahead. Stocks may face pain, though buyers remain. And I'll just read through the first few paragraphs for you real quickly because I think it's significant. Investors may crave a quiet market this coming week to digest the recent volatility in the stocks and rehash Sunday's Super Bowl, but the prospect doesn't look likely. The catalysts that drove the Dow and the S&P 500 to their worst monthly performances since May of 2012 have not gone away. The retreat from emerging markets and stocks in general appears to have more room to run as the factors that helped propel the market to record highs in mid-January aren't providing enough support. Calls for a market correction have become louder, with the S&P 500 down 3.6% from its all-time closing high, and the Federal Reserve's announcement on Wednesday that it will keep trimming its monthly bond buying. More than 80 S&P 500 components are set to report earnings next week, but the myriad issues surrounding emerging markets remain at the forefront for investors. Last part, quote, bad news in any area of the globe is bound to make sentiment less positive in others. This isn't an issue of contagion, but there will be influence, said John Chisholm, Chief Investment Officer of the Boston-based Acadian Asset Management. He said there's plenty of more instability ahead. Now, Tanner is Tanner is out of town. Tanner's back in class. Another caveat of spending the amount of money that he spent to learn what he learned, is he can go back to it and sit in on it anytime he wants to again, which is awesome because that's what he's done the last couple of weeks. Not last weekend, but the weekend prior to that, he went back to see what all maybe he missed the first time he went. He's back there again this weekend. And Tanner, can I read them the quote that you sent to me via text, or do you think it would be wise to keep that close?
It would probably be wise to keep that close for the moment, Jimmy. I can read a portion of it. And I know I sent you quite a few quotes, but the
quote I'm talking about.
The sentiment is that we are headed into a full-blown bear market because the emerging market problem has not really fully panned itself out. I know that there was news floated saying that everything's all good because Turkey raised interest rates and all this other kind of stuff, that they were tightening monetary policy. Well, yes, it does tend to stabilize the foreign currency. However, it also encourages people to save money instead of spending it. Well, how does that affect the U.S. economy? Well, these companies that are growth companies, they are trying to sell products in the very countries that are having these economic problems. And so the sentiment is that we're going into a bear market. We're not declaring a bear market yet, but we're so close to it. It is crazy because the emerging market problem has not been solved. They just tried to put a Band-Aid on it so that they could begin to float some good news. At least the big boys have been floating good news. And the reason why they floated good news is because they don't want things to go down too fast, because they have to move their positions in order to capitalize off of it. Now, for them, it's relatively easy for them to do that. However, they have to cover their positions that they've already got open. So you see, in fact, Jimmy, I would call what we're looking at right now over the last 1, 2, 3, 4, 5 days another consolidation. You call the consolidation on the top. This is an additional consolidation at the bottom. And if you take a look at your daily chart on the S&P, you see how the 10-day moving average is now moving below the 50. Well, that becomes an additional line of resistance.
So not only now does it have to get to the 50, it's got to get through the 10 to get to it.
That's exactly right. And we can take a look back in history. In August, if you can move back to August, the S&P moved below the 50 before, and it tried to move back up, say on August the 20th or 23rd, somewhere around there. I'm having to look on my iPad, so it's not as concise as what you've got on your computer. But see how the 10-day eventually moved below it,
right?
Below the 50. Well, see how the 10-day actually became resistance there for 1, 2, 3, 4 days. It moved kind of along with it, and then a 5th day it broke through it, but it didn't close above it. And then on like September the 4th, or thereabouts, September the 4th, it finally broke through, but then it had to meander around it until finally the 10-day became support, and then it was able to break through. So the 10-day being below the 50 is really, really significant at the moment, because it's going to take a tremendous amount of momentum to break through that. In fact, not just neutral news, it's going to require good news. It's going to require fabulous news.
What kind of news did we get back in September to help us get off the 100 and back through the 50? Do you remember?
I do not remember, but okay, Jimmy, I know that the Fed was doing a whole bunch of talking at the time. In fact, they were having monthly meetings and coming out and talking about their tapering or the possibility of tapering the quantitative easing. And so I would imagine that had something to do with it. If you take a look at the last time that it was that the S&P was below the 50 and everything, that right there was during the government shutdown. And it did a doji on the day that they announced that, hey, we're going to have come to some sort of an agreement, and then of course it moved up. So we're talking about the same type of fabulous news. Not only does emerging markets have to be recovered to the satisfaction, exactly, because these problems are more than a 2 or 3 or 4 day problem. These problems have been in the making for months and possibly even longer than that. And the Fed making the decision to begin quantitative easing is the reason why it actually came to a head. So it's only taken a month for it to become a major problem in emerging markets, and the Fed decided to taper it even further at this announcement. So that would mean if you go 1 + 1 = 2, then that would mean that more than likely the fact that they're tapering it even further is going to have an even greater impact on emerging markets, to the point where actually somebody very important in India, and I wish I could remember the man's name, but he actually came out and told the American Fed that they needed to quit being selfish and think about the world. So India is now on the verge of having major problems.
Well, I mean,
all because of the tapering. Go ahead.
I can't help but think about politics. If you were to have a Republican president in office, he gets to pick who the Fed chief is. When you have a Democrat, in office in the presidency, he gets to pick who the Fed chief is. So why on earth would Bernanke and now the new person, Janet Yellen, why on earth would they not curb this back to help correct these markets, knowing that we've got elections coming up in 2014 for the same people that put them into the positions of power that they're in? Do they think that is there a larger downside to dinking with it more that outweighs, messing with it?
Oh yeah. For example, if they were to continue to do quantitative easing for too long, it could actually cause it could cause one or two things, and I don't know exactly which one. I know that the Fed is extremely worried about deflation.
They've come out and said that in a couple of their reports, yeah.
Yeah, they're worried about deflation, so if they put too much money into the economy, it means that prices would go down instead of having some sort of inflation. And that's actually more dangerous than inflation. So they would much rather tighten policy, which, by the way, quantitative easing is tightening policy and strengthening the U.S. dollar. And so by tapering the quantitative easing, they are actually making the dollar worth more and causing people to save more of it. Which in turn, yes, it affects the stock market, but after infusing cash into the market for so long and making bonds so unprofitable for people to hold, they eventually have to give it up no matter what. You can only pump money into the economy for so long before it begins to backfire, or before it begins to become something that has no effect on the economy whatsoever, because people just assume that it's going to continue to be there. So they're tapering it. The fact that they're tapering it is causing the emerging market problem. The fact that we have a ton of earnings reports that have come out that are disappointing, all of those things are contributing to the problem. Or not to the problem, but to the S&P falling below the 50-day and actually having this huge correction. Because even if the S&P does recover This is a tremendous correction. We're talking about giving up games from December 20th forward. That's major. That's not a small correction. And so I'm just saying that we need to be in a position as traders where you need to be able to go through a list of stocks, and say, okay, well, what if it does bust through the 50, does bust through the 10? What do we do? Well, if it busts through on high volume, we're going to get into call plays. So we're going to get into plays that are for moving up. If, however, it continues to meander where it is, or if it busts through the 100-day moving average, we're going to get into put plays or kiss goodbyes. Kiss goodbyes are a two-stage play. You do calls on the up from where it looks like it's reached the bottom. You do an up play until the stock itself kisses a 50-day, and then you sell it. And then you look for confirmation that it's moving down, and sometimes you'll get 2 or 3 opportunities to buy at a good buy point on a kiss goodbye, because people are trying to push it up through the 50. But you can take a look on the minute chart,
kind of bounce and
where
bump
it
its
doesn't.
way on the 50 a couple of times.
That's
in
exactly
a day.
right.
It may do it 4 or 5 times in a day.
Sure, and then the truth is it may turn around and do it again the next day, which I've seen them do it multiple times. So you have good buy points, and you want to buy it right as it's passing, or not passing, but right as it's bouncing off the 50-day to get the greatest advantage on your play, because you want the stock to move in your favor immediately after buying it. That is one way that you make sure that you're in a good position, just in case the stock does decide, hey, by the way, I'm going to go back the other direction for whatever reason. So you want to buy it at a really good buy point and let the stock go ahead and move in your favor. And you can tell within a few minutes, maybe the rest of the day, whether the play is going to work. If you get a dollar movement, then all you have to do is go, okay, well, where's my sell point? And you should probably take a look at where the bottom was, and look at it, where the bottom was before it started moving back up toward the 50, and look at it as a really good sell point, unless it blows straight by it. Sometimes they will blow right on past the previous bottom.
Okay, now we're going to try to help put together a list for both scenarios that will be available starting Monday morning. One for call plays that will only be used if we bust through the 50, and one that will be put plays if we break through the 100. Your gut instinct: are we going up? We going down?
I believe we're going down.
I do too.
That's
and
my gut.
Part of the indication is right here on this chart. Okay, if you look let's look at not yesterday, not the day before, but the day before that. That was our first rally off our recent fall. And if I look at the volume, we had low volume on the day. That meant the only people that moved the market up on the 28th of January were the big boys, closing positions on shorts. That's it. John Q. Investor wasn't buying in. They were sitting on the sidelines to see what would happen. The very next day is a red day. We went back down on it. That was on high volume, or a little bit larger than average volume, which indicates because these big boys, they got to make money one way or the other. So now they had to turn around and short positions again. Okay. The next day after that, yesterday, a green day. We had an up day. Again, the candle moved a long way. It moved a long way on lower than normal volume, indicating the only people that were moving those up were these big boys closing those short positions. Okay. Today was the first high volume day that we've had in a long day. And that's because from the get-go, we went 22 points down until we hit the 100-day. We came 22 points back. That's 44 points worth of movement until we hit the open. We went up beyond it for, I think it was like 11 points before we stopped, turned back around, went past the open again, and we closed, how many points down? 11 points down. So we went 22 points down from our high. You see how significant that is? We opened, we fell 22 points until we hit the 100. We came back 22 points, back to its original open. That's 44 points worth of movement. We went another 11 points higher than we opened, turned around and came back and lost all of that and went down another 11 and a half points. That's another 22 points worth of movement. That's 66 points worth of movement in a day. That's a lot.
Extremely volatile.
And
I want to point out a couple of things. I want to point out a couple of things on just the last 5 days.
Okay.
Now, on the first green candle, the 28th, you see that they actually gapped it up to open it a little bit. And what that is that's your market makers trying to make a market, trying to say, hey, look, it's going to move up today. That was trying to entice the public to go ahead and buy into it and hopefully push it up above the 50-day.
Yes.
When that didn't happen, then, like you said, they shorted. The big boys shorted and pushed it all the way down to the 100-day. Now, at the 100-day, technical traders go, okay, it bounced off the 100-day, I'm getting in. Okay, so they got in and they pushed it up a little bit, and then look at what they did the next day. The market makers did again. The next day, they gapped it up to bring all kinds of momentum, thinking that, okay, it bounced off the 100-day yesterday, now we're going to gap it up and see if we can't get some momentum and bust through the 50-day.
And instead,
of course, it failed.
If they would have opened it at its close, we would have went below the 100.
That's probably the case.
That's what happened today, too, though. Think about that.
Think about that. Exactly. The last thing I want you to notice is today the wick did not go above the candle body from the previous day.
Okay.
It's dead even. It's dead even, which means that has actually become some pretty significant resistance, because if you take a look across your screen, you have the wick from today, the body from yesterday, and the wick from the other green day. They're all even.
I'm going to draw a trend line on that for people that are watching that. That's kind of, I never noticed that.
Mm-hmm.
I think the market makers manipulated today severely, because they could read the tea leaves in the pre-market trading. At one point, we were down 20 points in pre-market trading, which is huge. 5 points is nothing. 8 points is nothing. 10 points gives you a general direction that the market's going to go for the day. But when you're 17, 18, 19, 20 points, which we were at one point, that's huge. So instead of opening it where we closed, okay, they actually gapped us up.
Yep, they were trying to get momentum off the previous day.
Yeah, and
they had gapped it before.
They wanted to get as far away from the 100-day as possible too.
That's exactly right. And so there's just the major point about this is there's all kinds of weakness. We're not talking about just neutral news or the big boys floating old good news. It's going to require really good news in order to bust through this. I don't see it coming. I don't see anything on the horizon that says that they have anything in their arsenal to float good news.
The only thing that could happen that I can foresee is the Fed turn around and say, you know what? I know we just had a meeting and we said we're going to keep the bonds where they are and cut the stimulus the way we said we're going to cut it. But we've seen too much kickback on that, so we're going to change our mind. That could be the only good news that I could see.
Yeah.
I don't think they're going to do it.
No, because if they were going to do it, I think they would have taken advantage of it at the meeting, and because they could have done it at that meeting, but they chose not to. Instead, they chose to taper it back. So, the biggest thing is you should not be in an up play unless your up play is a kiss goodbye at the moment. That's number one. And the reason why is because if you're in a traditional up play, you could be caught in a whirlwind. If it does bust below the 100, you could be caught squarely in the crosshairs of an event that will cost you a tremendous amount of money. That's just my opinion. Of course, I can't tell you what you should do. I'm just telling you what I would do. So I would play kiss goodbyes. That's the only up play that I would be involved in, and that's the up part of the kiss up to the 50, and then I would get out of that. Otherwise I would play put plays at the moment. They're the safer of the two, and just be watching to make sure that the S&P does not cross over, or that great news does not come out. Because if great news, that great news doesn't come out, because if great news comes out, that'll catch you in the middle of your put play as well, especially with the market being so far down. There's going to be a broad-based recovery if, in fact, they're able to find news that is positive enough. So, I want to give everybody a shout out about the kind of trading that you've been involved in. You have been involved in the hardest trading that can possibly be imagined. The possible death of a bull is literally the hardest trading you can possibly be involved in. Hopefully you've kept most of your money. Hopefully when you've lost small. Hopefully when you've won big. And hopefully very soon we will be in waters that aren't so muddy. So just take the moment to take a look over your previous trades, learn from them. If you have an expense, the only way that expense can be a really bad thing is if you don't learn from it. So take a look over your previous trades, especially the ones that were expenses, and become a better trader. Review the information on the website. Review how to pick good stocks, and even start looking for stocks for yourself. I know that there's a list posted on the website, but you have the ability to pick good stocks, check fundamentals, look for technical analysis, all of those things. And there are some tremendous plays available to you at the moment that can make you a whole lot of money, and make you money with really, really good probabilities. So keep your head up.
What about those people that are not in any kind of play right now?
If you're not in any kind of play right now, unless you have found a kiss goodbye, I would not get into anything. I would sit on the sideline. One thing about being a good trader is learning when not to do a single thing. So I would wait for the market to tell you which direction to go, unless you find a kiss goodbye. So what are we looking for on a kiss goodbye? We're looking for an uptrending stock.
Let me pull up STX. This is the one you got into today. So here we are. We already had our reporting. This was an uptrending stock. You can see it was clearly uptrending, solid movement upward. We got bad news in the form of a miss on their earnings statement. That actually dropped it very quickly. We got below the 50. When we got below the 50, we closed below it. We didn't quite get to it on day 2. On day 3, we got to it, bounced back off of it, and that's the kiss. So once we bounce back off of it, we get now we're on a downtrend, and this downtrend off this may go for 3 or 4 days.
Yep.
Correct. Okay.
That's what you look for, and your best buy point is when it kisses. It literally touches the 50-day moving average, or comes really close. And so yesterday was actually when I bought. And so I've had some pretty good movement on it. I'm in the plus actually on the play, and so that's what you're looking for. You're looking for a pattern like that. And let me take you to one more, because this is more of a classic kiss goodbye. Go to Triple D for me, Jimmy. Okay. You notice how over a long period of time it's been in an uptrend, and then it had some news that affected it, and it broke through the 20 for the first time in a very long time, and then it went up above it and meandered back down, and then it crossed below its 50, and it actually gapped way down. And then see how it took 3 days to move back up to the point where it actually kissed its 50? That's where I bought. And so it actually kissed the 50 3 or 4 times. And that's where I bought the stock, or bought the put play. And then I'm going to hold it for probably 2 more days unless market tone turns completely against me. If I have tremendous news or the S&P moves above the 50-day, I'll sell out of it. But I'm going to hold on to it most likely to the $73 mark or lower if it moves through that mark on high volume. Now, whether it makes it that far or not, it has the overall market has a whole lot to do with that. So I'm going to monitor this stock. Check in on it every 30 minutes or so. Maybe watch it on a minute chart, especially when it gets closer, or if news is affecting it, or if somebody.
That's something we've learned too. I've learned is I got to walk away from this thing. You know, I can't watch the minute chart. That's interesting, I guess. You can look at the minute chart if you're looking for your buy point or your sell point. You're about to get in or about to get out. But if you're going to monitor it, man, you got to let it do its thing. You either bought in at a good point or you didn't.
Let's pull up the minute chart on Triple D, and we'll just discuss that. First thing this morning, it moved down. I mean, drastically.
That's so. And I'm right here, and it dropped all the way to this point within the first.
Yeah.
Minutes.
And I'm going. Yes, I'm doing the happy dance, you know. I mean, I'm going, look at that, it's moving my way, and I'm just about ready to go crazy over it. And then look what it did over the next 15 minutes to an hour.
Yeah.
Whoa, it gave almost all of it back. Now, I could have really, really been panicking, going, you know what, it found a bottom, so it's going to bounce up from here. But instead, I went over and took a look at my daily chart, and I said, nope, it's got a long ways still yet to go. So I just let it do its thing, because I figure, okay, well, if it really was a kiss goodbye, it's going to go down a whole lot further. So it did it. It went down and actually went further down in between 10 and 11. And then it meandered back up and went sideways, and then went back halfway down and then up again, and then finally closed really close to the mark that it did in the first 3 or 4 minutes of the morning. So holding on to it, I didn't I did not get the fake out. In other words, I didn't sell out of my position when it looks like it had found a bottom. Now, if on the daily chart I had gone over and said, okay, on the daily chart I'm really close to support, then I would have been going, okay, well, I'm going to get out of this. But instead, I'm not getting out of it because it's nowhere near where it should go if it genuinely is a kiss goodbye. And so I'm kind of hesitant talking about the plays that I'm in at the moment because I would discourage. I know that some people would say, "Well, I can jump in right now." Well, I would discourage you from doing that, and here's the reason. Even though I fully expected to go down further, you would be buying into the middle of a play. What if you bought in and immediately market tone turned against the play? Where would you consider your resistance to be? Well, it's the 50-day, which means you'd have to have $3 worth of movement against you before you would see whether resistance was going to hold or not. That is a lot of exposure. So the best time to buy in is when it does the initial kiss goodbye off of the 50-day. And in this situation, if the 10-day is below the 50-day, then that would be your kiss. So I can't tell you what to do. I can just tell you what I would do under the situation. If I wasn't in this play, I wouldn't get into this play now.
What we
Even
can
though,
do though is like we said, we'll get them a short list of potential
sure,
plays for just regular puts or kiss goodbyes.
yeah,
Um, and personally, I'm a little on the conservative side. Tanner and I have talked about this. I wouldn't get on the call play to go up. I would only
right,
get the kiss and then do the put play after that. Um, I I wouldn't be in I would not be in anything that had the word call associated with it right now. And I
yeah,
know that we've seen some potential there where a lot of people have said, "Oh, look, it's going up," but no, it ain't.
yeah.
I
It's
just
a
don't.
fake out. At least it's
I
been
don't
a
feel
fake.
it.
It's been a fake out so far.
Now,
So
if this goes down like I think it's going, and you think it's going, my play that I'm in, Texas Instrument, just became very, very valuable.
yes,
I'm going to make a
it
lot of
sure did.
money off of it. If on the other hand we go up to the 50-day, if it goes through the 50-day, I'm selling. I'm just selling. Well, I'm advising anybody that is in Texas Instrument, if they get to the 50-day and go past it on the S&P 500 chart, that probably selling would be a great idea. However, for me, because of this particular play being all about faith and the relationship that I have with God, did he really tell me this? If he really told me this, I'm going to hold it. Did he tell me to get into Texas Instrument? No, he did not. Did he point that one out to me? I can't answer that one way or another. But I can tell you that in this play, every time that I have went to sell it, whether I would have been making money, breaking even, or losing money, I heard clearly, are you making that out of fear? Or are you making that out of faith? So where's my faith? I I'm just going to go out on a limb here and tell you that I believe that I'm going to profit off of this. I just do. And if I'm dead wrong, it won't be the first time I've been dead wrong.
Nor me. I've been wrong so many times, it's insane.
So now a number of you guys got into Starbucks, you got out of Starbucks, you made some money on Starbucks, now you're sitting on the sideline. I tried to find something that looked like I could go in today that you might want to consider. That didn't really materialize. I will make a short list and I will continue to look. I have very little discretionary spending left. $390 according to my account is the only cash I have left, so it's going to have to be a contract less than that. I looked at EEP today. I told y'all guys I was looking at EEP. They had a put play available on it. I'll pull it up real quick. Tanner, you can too. This
Okay.
is Enbridge Energy. We've looked at it. I got 5 million trend lines on it. It went up. It kissed one of my trend lines and headed back down. I'm like, that's a good buy point. But then I went, well, so I'm not really sure that that's as high as it's going to go. So I held off on it. But it's been a predictable, repeatable, dependable cycle of up and down, up and down. They never have calls. They only have puts available to it. So I pulled off on it, but that would have been about a $2 purchase. So $200 on a contract. I thought that would have been an easy buy to make. But after looking at the trend lines, I'm not sure that it doesn't have any more upward movement left in it. So that one was out. I did put together a little short list on Facebook. I don't remember what those were. But we're going to put together an official one for calls, one for puts. Do not get into the call unless it goes above 50 in anything, period. And not just get to the 50 and you just jump on board. No, you get to the 50 and you let it sit there for 30 minutes. If it's still there above the 50-day moving average for 30 minutes, it's a safe bet that everybody and their brother is going to start the rally. Because they've been sitting in cash. I'm looking at the volume on the S&P 500. They're sitting in cash. The only people spending money right now are a couple of day traders and the big boys. That's it. Day traders, they're always going to play because they ride it between trend lines. So, or pivot points, rather. They'll let it move up 2 cents and then they'll sell.
And they can play no matter what.
That's right. They'll 2 cents at a time. They don't care. They'll make money that way.
Yep. Yes, sir.
Now, if you don't find anything, and don't panic, what happens if you get above the 50? If I wait for it an hour, if I wait for it for 2 hours, we've been above it, is it too late? No. No, you'll find one that's at a good buy point. Well, what happens if it breaks below the 100 and I'm not in a put? Well, you just wait for the kiss. You just wait for the kiss goodbye. You know, if you're in a put play, when we do break through the 100, if it happens, you just hang on. Don't let go of it.
Right.
Because it's going to probably fall a long way.
Yes. So this is very exciting. I can't wait until this time period is over. And honestly, I don't care which direction it goes. It would. Well, I take that back. I do care which direction it goes. It would be healthier for the market and for our economy for it to have a correction, a full-blown bear market. But no matter which direction it goes, you're going to have opportunities to make money and make money for a pretty sustainable period of time. So just keep your head up. If you're not in anything, just keep your head up. Everything will eventually shake itself loose. It always does, because the big boys, the only way they make money is if the stock market is moving up and down. So the movement itself, they're making money off of it. So it will not go sideways forever.
I got one thing to say, and we're going to let people ask any questions or chime in. One last thing is, we do advertise a number on the show, and while I'm not allowed legally to give you any advice, if you want me to look at a stock that you're thinking about, I'll tell you what I would do. I'll tell you if I see something that maybe you didn't see, and give you some new angles to think about. That's why we put the thing up there. So we'll call the show. Anybody want to contribute or have anything to say? Oh, here we go again. Oh, wait. Greg actually typed his question out. Greg, just go ahead and speak into the microphone, man. Unmute your mic and go ahead and say something. Oh, apparently. He sent this just to me. Oh, he said that he heard on Fox News, Tanner, that they were talking about that this could be a bubble. Well, we've been hearing bubble for the last 2 months, so that's not really nothing new.
Right. And they're talking about bubble as far as the stock market. So just think about a bubble when it starts to burst. It could, the whole bubble's gone in one split second. And the bubble, you know how the housing market bubble was caused by policy, where they were lending money to people who didn't have even the money to pay the mortgage payment. Well,
Right.
This bubble on the stock market was actually created by the Fed themselves by breaking the rules with their own monetary policy. And so the fact that they have to start pulling it back is huge. It's massive. So just think about it. Think about it as a bubble, blowing bubbles. I play with kids all the time, so blowing bubbles. You put too much air into the bubble, it thins out, and it eventually has to bust. So they've been trying. They've been trying to let the air out a little bit at a time, but it's not really possible on something like this. So just hold on for the ride. You know, maybe this will teach the Fed, if they can ever learn it, that they shouldn't use monetary policy in order to prop up a market. Foreign countries, they don't do it. They do not do it. Take a look at China. China's economy is in trouble. Their Fed equivalent, I put quotations on it, their Fed equivalent isn't doing a single thing to prop the market up.
Yep. They've actually said they're going to let one of their major banks fail.
That's exactly right. So there's no such thing as too big to fail in China.
That's right.
That's what we should be doing. Let capitalism do what capitalism does. The strong, the ones who are capable of changing and adapting to market conditions, those companies succeed. They expand and they grow, and their stockholders make tremendous amounts of money. However, when the government steps in and starts putting all these extra conditions and all these extra regulations or giving a company money to do something that otherwise wouldn't be profitable, every single time the government begins to do that, all it does is distort what capitalism is. And so it's one of those things where eventually the companies no longer are really making money, which means that since we're capitalists, in the stock market, we'll begin to dump that stock because the company is no longer capable of adapting to increase their profit. It should be really interesting. This next week should be extremely interesting to watch happen and to participate in if you can find Kiss Goodbyes or get in on the plays that we've been talking about. So keep your eyes peeled. Enjoy the learning, and very soon there'll be a whole lot of opportunities to make money and make it on more consistent trades. So.
All right, so there's 26 people on this thing. I mean, only 7 of them are connected via computer. The rest have called in via phone. Now's the time to speak up, say something. What are your thoughts on the whole thing? And did you get in? Are you still holding Texas Instruments if you're there? Were you one of the ones that held on to Starbucks?
The only thing we can do is go with what we know best. Our instinct.
Jimmy, I wish I would have held on to Starbucks.
Yeah, I'm sorry about that. So do I.
And yes, I'm still in Texas Instruments.
And who is this? Sorry.
Tom.
Oh, are you?
Yeah.
Dude,
I'm gonna follow
into
you till the end.
Hello?
Okay.
Oh, can you hear me now?
I can hear you now. Who's this?
Oh, yay. This is Catherine.
Hey, Catherine.
So I was just kind of wondering, how low do you think it's going to go? Or do we know?
We don't know, but I can tell you this: if we go through the 100, we won't stop until we hit the 200. Now, we won't do it in a day, I don't think. But the 200-day moving average, I'll go ahead and pull it on the screen.
Because I've been kind of waiting, because I know it went down on Friday. I actually bought in on VLO on the dip on Friday and did pretty good on that, and sold it on Tuesday when it went up to like 52. But so I've been kind of buying in on the dip and riding it out. But I've been waiting for it to, I'm waiting for it to be more. I think it's going to go down more, but it really hasn't happened. I don't think it's happened, or has it happened, and I don't know it.
On the screen, the S&P 500, right now we keep bumping up against the 100. I've put the 200-day moving average. That's the next stop. So that's roughly somewhere around 1708 or so, depending on how that moves over the coming days. If we go back and look at your stock, are you in VLO currently?
No, I sold.
Okay,
I sold
good.
that.
Right.
I am in Texas Instruments still.
Okay.
And
if we went below the 100 today and pulled back. If we dip below the 100 again, it probably won't stop until we get to the 200. The 100 is very significant for investors, and correct me if I'm wrong here, Tanner. The 10, the 20, the 50, and the 100 are all significant because they form lines of resistance or lines of support, depending on if you're under or above it.
That's right.
The bigger the number, the more significant it has. So the 50 is well more significant than the 20. So you may find a stock that bumps along its 20 all the time. But if it ever goes below that, it's seldom going to go below the 50. When it hits 50, it's like, hitting a cement wall. It stops and bounces back up.
Okay.
If it still manages to get below the 50, the 100 is more significant. It's even harder to get through the 100. And to get through the 200, it's even harder than that. But I'll tell you this, if the S&P closes below its 100-day moving average, below its 100-day moving average, you're going to see so much panic and pessimism in the market that I don't know where it'll stop. Because if it said, okay, well, it got below its 100, we'll let it go to its 200, that wouldn't be a bear market. That would be a correction. It would be a healthy correction.
Yeah.
But if you see the S&P, which is 500 stocks, we don't look at the Dow because it's only 30. If you see the 500 stocks and on average go below their 100-day moving average, that's going to set a lot of fear. Let me show you something else too. This is off of CNN's Money's page. Let me pull over the website address. CNN has what they call the Fear and Greed Index, and sometimes it's listed right on the front page.
Fear and Greed Index.
I know, that's a little weird, isn't it?
Good night.
I'm looking for it. Let's see. Fear. Let me pull it up. I don't see it. Let me look through the front page of it real quick. Sometimes it's hard. Sometimes they hide it. Let me Google it. Fear.
Okay, but it's Fear and Money.
It's on CNN's Money's website. It's Fear and Greed. Here we go.
Fear and Greed.
Found it. Yeah, I got it right here. Okay. So here's what's significant about this. Right now, we're on a 19. It looks like a fuel tank, and it's showing extreme fear. Okay, and here's where how it ascertains that. First of all, it looks at stock price strength. It says the number of stocks hitting 52 weeks highs exceeds the numbers hitting lows, but it's at the low end of its range, indicating fear. So just fear, not extreme fear. The next is stock price breadth. It says the McClellan Volume Summation Index measures advancing and declining volume on the New York Stock Exchange. And this is cool, during the last month, approximately 7.18% more of each day's volume has traded in declining issues rather than advancing issues. So
that's
during the
interesting.
last month, each day has had 7.18% more than its previous days of people selling off or buying puts.
Wow.
Okay? That's huge,
That's
right?
huge.
Junk bond is extreme fear. It says investors in the low-quality junk bonds are demanding 2.31 percentage points in additional yield over safer investment-grade corporate bonds. The spread is much higher than what has been typical during the last 2 years and indicates that investors are highly risk-averse. Okay, so they're very, very fearful. Market momentum. The S&P 500 is 1.96% above its 125-day average. During the last 2 years, S&P 500 has typically been further above this average than it is now, indicating that investors have become less confident in market returns going forward. And that is explained in the volume, the daily volumes on the S&P that we're seeing. We're not seeing high volumes when the market goes up, and it should.
Right.
You should be seeing high volumes, or
Right.
at least normal volumes. Instead, you're seeing light volumes, meaning the only ones who's moving the market up are these big investors with billions of dollars in their back pocket selling short positions. That's it. That's the only ones that are buying. Okay? That's big. Put and call options, extreme fear. This is huge. During the last 5 trading days, volumes in put options has lagged volumes in call options by 38.86% as investors make bullish bets in their portfolios. However, this is still among the highest levels of put buying seen during the last 2 years, indicating extreme part of the put investor. So there's 38% more people buying calls than puts, but it's way higher than it's ever been in the last 2 years.
Well, Friday when I was doing VLO and I was like, the market is extremely volatile. It's just up and down, and it's just crazy town. I have been on the crazy town train. I'm on the riding the train. I've been going up and down. Thankfully, I've been making a little money, but I'm doing really small things. Just one contract here and there, and I'm making $80 here and $50 there, and my account's up a little bit, but not. But I mean, it's just been like down and up, and you just can't stare at it all the time, and it's obsessive, and you just got to have faith, like you were saying earlier. And I just been holding out, and then my stock goes the right way, my option goes the right way, and then I sell out for whatever I can get. And you know what else? Remember that Merck? You sent out a text back in January. I'm in the bathroom. I'm scrubbing the bathroom floor. Merck, gotta buy Merck. I get up, I go in, I buy my Merck. I go, oh, sorry. And then I'm back in the bathroom scrubbing and he's like, sell Merck. I'm like, I am not selling that. I'm not selling that. What does he think?
Jimmy.
Yeah, I'm not selling that. Are you kidding me? He just bought that 6 seconds ago. I'm like, I'm holding on. And then I'm watching it all week go down and down and down and down, and I'm just thinking, oh man, I should have got out of that. Then what happens? 2 weeks. Yes, it just goes out of the. I wake up Monday morning and it's like 50.
There's a reason I got into this as a mistake, as if you remember.
I know. It worked out for me. I just want to tell you, it worked out for me.
Well, you held on to it long enough so that it eventually bounced back up. You have to wait, and this red line is our 10-day moving average. You have to wait for the 10 line to touch it. When it hits it, it usually bounces back up. Now it actually passed through it at this point, but it did bounce.
Right, okay? And so I said to myself, I am just on the crazy train here, and I need to know how to do this charting way better because I have no clue what I'm doing, really.
Yeah.
And I'm just sitting there going, whoa, that turned out cool. Sell that one, and there's my, because I'm only buying one contract at a time, not 10, but can you imagine if I did? I would have made $1,200 on the VLO thing, made $120 on that, and so it's all relative. I'm learning, and I want to thank you and Tanner. You guys are great, And I'm learning so much on the crazy train. But it's crazy, but it's a good
wonderful.
thing. But sometimes you just have to wait. You have to wait and see how it all plays out. And
I agree.
but
Sure.
I think it's go down for sure. I just don't know when, and I just don't know how, and I just don't know what I'm doing.
Well, on the Merck play, let's talk about that real quick. On the 13th, you see how it made a really, really, really tall green, empty green candle on extremely high volume, 37 million shares.
Okay, that's this one. Yeah.
Whenever you see something like that, the first thing you start looking for is a flag, because we call that a flagpole. So you look for a flag to come off of it, and typically it won't move quite like what happened here, because what happened with Merck is Merck ended up being sued, okay, and they had some announcements about a drug that they what caused the big flagpole was an announcement that they had been approved for a drug. And then you see on 2 or 3 days later, they actually had an announcement come out that they were being sued because of one of their drugs. And
yeah, I didn't wait for that. I just got out of it right away.
Yeah.
Right then, I was just like, oh, well.
What you're really looking for on a play like this is you're looking for a flag to form off of it, and then the second that it hits the 10-day, you would buy in. Now, of course, if you did that, if you followed that rule on this particular play, it would have gone against you for 2 days. But here's something about a stock like this. Typically, if it goes through the 10-day, it's going to bounce off to 20. So if you take a look, that's exactly what it did. It ended up bouncing off the 20 on like the 22nd, 23rd, on the 23rd, and then it bounced off of it again on the 24th. And so, and I may have the dates wrong. Again, I'm looking off of the iPad, but when a trade does go against you, especially in the beginning, and I'm really happy that you ended up making money on it. But when you're only using one or using enough money for one contract, the biggest thing you want to make sure you do is that you follow the rules. And the reason why is because the rules are there to keep you safe.
I know, and I have broken every rule over and over again. I am a rule breaker. I am a violator. I am in violation. I'm in total violation.
Well, the reason why we want you to use the rules is because of this.
Yeah,
this reason right here. You've got one contract, which is great, and you made money off of one contract eventually. But what if you did have 10 contracts? Or
exactly,
let's talk even bigger.
As it can go up exponentially, it can also go down exponentially. I know.
That's exactly right. And so what you're losing every single day is you're losing the time value portion of an option. And so every single day, the amount that the stock has to move in your favor is well, it's not exponentially greater, it's just greater. It has to move in your favor even further for you to break even and also to make a profit. So the idea is to get into trades that you recognize, or trades that, if you're going to learn, you might as well learn with small money, right? So, but
that is my thinking. I just have a little,
Sure. Well, one of these days, hopefully everybody on this conference call will not be doing 10 contracts, but will do 100 contracts.
Yeah. Instead of one contract.
That's exactly right. That's the whole
I got
point,
one contract.
Is to learn small, learn the right way small, and then when you get into larger money trades, you'll be able to use what you learned in the small transactions now as building blocks and stepping stones, so that it doesn't Well, so that you can be a better trader. Because the whole
Thank you.
idea is to be
That's
be
right.
a trader for life, and because you could do this well into retirement or well into whatever hobby that you ever wanted to do. So, but that's really encouraging. Thank you for sharing with us what you've been doing.
Yeah, I would say don't do what I do because it's just crazy town. But that being said, I said to myself, I'm not going to be doing it anymore. I'm going to learn how to do these charts. I'm going to follow and do what Jimmy and Tanner are doing because I don't know what I'm doing. I just by luck that it's fallen on my side. And when I've lost small, like $20, $30. I think I lost one time on. I don't even remember what it was. Whatever I was doing.
I can tell you that over the last month I've done, I'm trying to think about how many trades. I've done at least 10 trades. I've had 5 of them move against me, and I lost small on every single one of them. In fact, some of them I broke even on, even with the stock moving against me. I've had enough of them go in my favor where I've been able to make money. And I've been watching this probably a lot longer than most people on the call, and maybe that's not the case. Maybe there's somebody extremely experienced on here, but it's just about getting the numbers in your favor, because if you get into enough trades at the right time and you lose small on the ones that go against you, you can win big on the ones that are actually working in your favor, and that's how you grow that account.
Yes.
So just keep your head up, keep learning, and before you know it, you'll be getting into trades and holding them for 5, 6, 7, 8, 9, 10 days, however long it takes for it to move from one point and from resistance or support to the other one. And that's how you really make your money, is by staying in trades long enough for them to do what they're supposed to do.
And I think I just stayed in them just because it wasn't going in my favor, and so I was just going to stay in it until, I was in it to win it. So
sure.
Let me
I was just going to stay on.
in here.
Go ahead, Jimmy.
That's exactly what I'm doing with Texas Instrument. I'm staying in.
We're in it to win it.
But that's the wrong attitude.
Yeah.
I'm not doing okay. Once I'm done with Texas Instrument, you won't see me doing that anymore. This is a pivotal point between me and God. Okay, and it's not that I've drawn a line, and I got to be careful about how I describe this. I have not drawn a line in the sand between me and God. That I haven't done, because I'll lose every time. I know that.
Yeah.
But what I have done is drawn a line in faith with myself. Do I trust that I'm right where I'm supposed to be, doing exactly what I'm supposed to be doing, even though I've seemed to have met so much resistance in this thing? Okay, you guys don't know the pressure that's on me right now, because I know that eyes are on me. They're watching me, and I want you guys to make money off of this thing, and I want to help be responsible for that. And if I lose, I know many of you guys lose, and if I win, I know you win. So the pressure is intense, and it shouldn't be, but it is. There's just no escaping it. It's there.
Oh yeah, there's pressure.
So I'm in a position right now where I actually had to look at God and say, dude, and I told you last time we had this, I said, what the hell are you doing? That's what I told God. I used profanity with him. Like, what are you doing? I was so mad, like none of y'all get mad. So, I finally, after I calmed down a bit, and with, like I said, I was just brooding. I was just sitting in my own muck, just sitting there. When I finally said, God, what? I don't understand. I'm teaching you. And that's when I saw that thing about the S&P 500. I believe there's something huge going to come out of this. And today, when I had the opportunity to make $300 on the trade, okay, the reason I was panicking trying to get to the screen to sell it was out of fear, because I didn't want to lose. I wanted to make some money, and I was tired of losing money. I wanted to make something. And so, and there again, that little voice in the back said, fear or faith? All right, I'm going to have faith. I'm going to hang on. 3 times after that, I could have broke even. Fear, faith. So this is not a typical trade. This is not something I'm teaching you. This is not something Tanner would advise on.
No, this is like what
I'm
I do.
telling
This is
you-
like flying by the seat of your pants. This is how I trade.
But I have a feeling, though, Catherine, once I get past this particular trade, this particular one, I'm going to be a whole lot better off. Not just financially. I'm talking about up here, between the ears, here in my heart. I'm going to actually feel more comfortable about trusting the person who put me here.
And believing in yourself and trusting yourself. And you know, you're a smart guy and you make good decisions and you have to believe it. That's what God's telling you.
I think that's really it. I mean, look, as a photographer, it's a very technical trade, being a photographer. And there's almost I have learned so much about photography in such a short amount of time because I, number one, applied myself, and number two, I was in a teaching position, so I had to know everything about it. So I'm just constantly pouring into myself about photography. That this is going to sound very cocky, but I've gotten to the point with my photography that there is nothing that I can't accomplish. If I want to do it, I can accomplish it with a camera. I know how. I can make it happen. I have all the learning, and I have the artistic ability that I have honed through practice that I can combine together to do it. But there was something always missing in that. Okay, well, something that had to be included in that I learned early on. That if God wasn't involved with what I was shooting, it didn't matter how much stuff I knew. It just kind of fell apart. But when I stopped and said, okay, God, I'm just a dude with a camera. I'm going to need some help here. It always seemed to work out. Every shoot that I went to, I prayed, okay, God, you got to take care of this because I'll wreck it. I will mess it up. And it always seemed to work out. From the editing side, I'm not a genius in photography editing, but you know what? I don't have to be because of the skills that I amassed in
Yeah, I don't
with
have
the
to be
camera.
either because I have all your presets.
Yeah.
Just kidding.
So I'm trying to. I can tell you one good thing that's coming out of this right now is the ability to sit there and hold and not panic. The longer I've held this stock, the easier it is for me to deal with it.
And I
For
think
the first couple of
panic is the
days-
word. When I say crazy train, that's what I mean. Panic. And I've just been
Yeah.
going, should I sell? Should I sell? Should I go? What? And I know nothing. I have no idea. That I was in one trade and they sold like 100 more common stocks, and I'm like, what does that mean for me? I don't know. And then the next day they were selling 200,000 more. You know, you're going to release to the public. I'm reading all this stuff. You know, like on all these like, you know, what's the one that
Seeking Alpha.
Yeah, Seeking Alpha and all this stuff. And I'm thinking, they're selling that many. That's going to deflate the price of my stock. It's going to be terrible. I'm only thinking my own mind, you know. And then it was up, and I broke. I probably made like $100 on that trade, if even that. And that was actually the stock I bought, and I sold that too because. And then after that, it tanked out and started going down, down, down. And
Well, I can give you some clarification as to what the company was doing. And it really comes down to, just think about it this way. General Motors, they make a certain number of cars every year. And the thing is if a particular car is selling really, really, really well, General Motors just makes more of them. Right, and that's how they keep the price level so that it's affordable. Now, when it comes to companies when they do their IPO, they have to declare how much stock the company is going to have, and they declare that, and the number is set in stone, which means that they can never change that number, okay, which is really cool. because that's what causes the price to go up on the stock market when people are buying a whole bunch of it, because when people are buying a whole bunch, there's less available for sale, right? And so
Right.
it causes the price to go up, and that's the reason why the stock market works.
Well,
And
that
when
was
a
my
company,
thinking. My thinking is that they were my thinking was the same thing, is that they were selling more. That's going to deflate the price of my stock. That's why I got out of it.
well,
That's
what
a
it
very
was,
good. That's
when
exactly right.
when they're issuing the common stock, what they're really doing is they're selling stock that the company already holds. And when a company does that, the reason why they do that is because they're trying to raise cash.
Mm-hmm.
So
Oh, I see. Yeah.
when the stock started moving down as a result of it, that was a good call, because they're raising capital because they're running short on actual literal cash. And so whenever a company makes an announcement like that they're selling some of their own stock, that would be a good time to, if you're in a stock play, it'd be a good time to sell.
Yeah, and I did. But, I didn't
and you
know
did.
that. I'm just driving the crazy train. I don't know what I'm doing. I'm like, but, like it's like instinct almost. I just went with my gut feeling, and my common sense tells me that, one day they did that, the next day they were selling more, and I was like, well, I don't think I got to get out of this.
Right.
But,
and on the opposite side, if you hear about a company doing a stock buyback, that's a company that they're trying to they're actually in a very good financial position. And because they don't typically do that unless they have extra cash floating around.
Oh.
So, yeah.
Good to know. Good to know.
Yeah.
I want to jump to something that came in via the text.
Okay.
Hang on just 1 second. Pull something up real quick. Yeah. All right. So, Greg Johnson, I believe, he wanted to know how Lockheed and Boeing were doing, because he's in the Air Force, and how are those two companies doing, Lockheed and Boeing, because he knows about the contracts that exist and what's just been passed. Lockheed, you see it on the chart right here. We did a dip. It's bounced off its 50 a couple of times. It hasn't been on its 50 in quite some time. I would say it's doing pretty well, but because it's broke out of its trend, there's nothing really to determine on this yet. We have to wait for a new trend to develop or to go back to the old trend. I can pull up Yahoo Finance, and I can tell you that their next earnings date has not been announced. We do not know when they're going to announce their earnings. So that will play into all of this. I don't know when their announcement is going to be. Boeing, on the other hand, which is BA, they did announce, and you can see right there on the chart, it stank on ice, or at least they missed expectations, and the stock fell. So is it too late to look for a kiss goodbye on this stock? Yes, it's too late to look for it went way past the 50. There's no way it's going to come back and kiss the 50. You actually have to wait for a new trend to develop in order to figure out what you want to do. Could you still jump in on a put, play, and win on this? I don't know.
Here's how
my hunch
I would
is you
play
probably could, but you're not at a very good buy point.
Here's how I would play it, Jimmy. Do you have your 100-day moving average up on this stock?
I can throw it up there. I'll trade my 20 for my 100.
Okay.
Okay. Oh, yeah, okay. So we passed below the 100-day moving day average.
Did it close below it?
Yes, it did. It closed below its 100-day. The next day, which is today, it's set below it. So if in the next 2 days we come up and we bump against the 100 like we would the 50 and bounce back down off of that, there's your kiss.
That's exactly right.
But you still have to wait for that to materialize. We're not there yet. It could do it tomorrow or Monday.
Or it could go all the way down to the 200.
Yeah, or it could just be in free fall right now. We don't know.
That's exactly right. Although it looks like it may have found support at the 123.57 mark, somewhere around there. So, but I would wait and see on that one. I would not get into an up play on that.
All right, last question, last comment. We're going to hang this up because we've been on here for an hour and a half, and I'm severely distracted because I smell chocolate chip cookies, and that is really messing with my brain. So I want to go eat them. Nothing from nobody. Going once, going twice, 3 times. Last parting words, Tanner?
Well, you guys be blessed. I'm excited for everyone because I think we're actually going to move into an actually simpler trading environment.
Please,
and
Jesus.
What's that, Jimmy?
Please, Jesus.
So, but just keep your heads up. Keep learning. In all truth, I probably don't know exactly what you're doing until you get about 30 trades under your belt. And then there'll still be new things. In fact, new things with every single trade you do, probably for the rest of your life, where you will be perfecting your craft. And so just keep learning, and I hope to spend time visiting with you soon.
I want to say one more thing, Tanner.
Sure.
I got to tell off on you. Tanner is God bless him. He's the busiest man I've ever met, and has so much going on in his life that it's just not even funny. And yet, he went to bed the other night. Was it maybe last night or the night before? I can't remember. And he actually dreamed about a new type of trade. Okay, and I'm not going to give you all the details of it because it's kind of complicated, but it plays a news play, meaning you got really good news for the company and you know it's going to gap up or gap down, good news or bad news, or an earnings report is due on a company that you know if they miss, they're going to the basement, and if they make their earnings, they're going through the roof, like a Netflix, for example, one of these high-profile stocks, Google is another one. Boeing, you know, they miss, they're going through the bottom, and that's exactly what happened here. Tanner dreamed a way that there's no way that you can lose on it, that you can actually get out in front of it the day before it happens and invest in it, and no matter what happens, whether it goes up or goes down, you make money every single time. It's the coolest thing. There's no name for it. I call it a double-fisted strangle. That's what I named it. It's called a double-fisted, because there is a play called a strangle. There is a play called a strangle, but not like what we're talking about. He actually dreamed this up while he was sleeping. That can only come from God. So there's another. I can't wait to reveal it. But you have to have money in order to be. And when I say you have to have money, you got to have $10,000-$12,000 in order to be able to.
Oh, well, we'll work on that.
Yeah, we're gonna.
We'll work on that. I wanted to say thank you both again, and I think these go-to-meeting calls are very beneficial. I learn a lot. I know that, and so I like them. And thanks.
Yeah, we'll do more of these.
Sure.
We'll do more of these. Absolutely. So, all right. Good night, everybody.
Good night.
Be blessed.
Good night, everybody.
Good night.
The organizer has ended the session, and this call will be disconnected.